Last week, this is last Tuesday, 6th of June. We are here last week. I talk about that. I don't have much to comment apart from bullish. And especially, we do have this Friday breakout bar. This is the first time since half year, 6 months. Yeah, more than 6 months, we have a breakout. And that is significant. And not only that, we also have the Russell 2000 together with Dow Jones, Nasdaq actually break out together. That's certainly significant. And subsequently, I talk about that we might see potential attempt to rally to this resistance level 43. This is a zone from around 4280 all the way to the high here. Look at this. It tested, let me draw a line. It tested around this 4280 and it consolidate there. Look at this consolidation or the pullback is very bullish. It's the horizontal type of the pullback. Not only like he's holding up again, and this is super shallow. If we compare the magnitude to the downside, we got this reaction, we got this super choppy reaction. And from here, we got a low volatility. All the reactions are very shallow. And until we see this, the bull flag, this is flag, is even more shallow. This is a sign of the bullishness, suggesting continuation to the upside, which is confirmed here last Friday. But watch out, last Friday's candle, there is a rejection tail, but the volume is very low. I really doubt that. That might be due to the contract rollover as well. But nevertheless, we want to see the price, whether there is a follow through to the downside, means that there are people taking profit of the high here and then consolidate. But not only we didn't see that, but we also have the follow through to the upside. Look at this bar from yesterday. It also comes with high volume as well. Dave said, can we see a pullback in price action? Do you mean like what sort of the pullback do we anticipate in the short term? Or you want an example of a pullback during the price action, like this is a pullback, this is a pullback, pullback. Short term, I still think that it's going to go up because right now I prepare for a pullback, but until I see a reversal of the price, I can't say that we definitely will get a pullback because as you can see, Friday's action got a rejection tail. That is a sign of a potential pullback or consolidation. But Monday reversed everything. This bar with a aggressive volume and also the close bullish bar is reversed. This potential pullback is still up until we see a potential reversal. Means like it could be this sort of the bar, like bearish bar, reversal, or this sort of the bar. The next level of S&P 500 should be somewhere around 44.50 to around the high here is about 45. Right now is testing this axis. This is axis. This is where the previous breakdown happened. If there is no reaction of the level, means that if the prices continue to go up or is take a pause, something like here, short-term pause, something like here, then it's going up. We are already at the meaningful level. This is a level. And the next level will be around 44, 50 or 70 to all the way to about 45. That is the next level. So short term is up, and I want to alert everyone that we are on a climatic run. This is a climatic run. Run, pause, another run. It looks climatic, but the volume is not yet that climatic. If we look at the analog from Nasdaq that we discussed last Tuesday we talked about there's a potential of the acceleration to the upside for S&P 500 based on the analog from Nasdaq 100. Let's compare this range. There's a range here. There's a range here. Once Nasdaq breakout, then take a look here. First leg up, pullback. Second leg up, pullback, consolidation. Now is onto the third leg up. There are 3 legs up to the upside. And Right now, S&P 500 is here. We got a breakout, first leg up, breakout again, second leg up. If the analogs is true, is a reflection of Nasdaq, then we should get a third leg up, similar to Nasdaq. If we look at Nasdaq, right now is already 15K, 15,000. Here is a meaningful swing high, but it's only 200 point away. We can hit that in one day, not a big deal. But this is an exit zone. The previous support now will become the resistance. From 15,200 all the way to around 15,600, there is a meaningful resistance zone. And not to mention about Nasdaq has been on a climatic run. Breakout, first leg up, pullback, second leg up, consolidation, pullback, third leg up. I wonder we might see like 3 push up to the upside with a climatic run into this resistance zone, and then followed by heavy profit taking with a change of character bar means that we should see something like this. We could see something like this followed by a change of character bar, bearish bar, profit taking, spike of volume. That might suggest the run is over. It could have a meaningful pullback to 14K and then to consolidate from here, because this is way too extended. Coincide with resistance level. And if we think about what's inside Nasdaq, what's the component inside Nasdaq, there are a lot of the semicon. Previously, I thought that, well, semicon is on a climatic run and it came with a lot of the volume as well, climatic volume, climatic run, but I don't really see a lot of the downside. I suspect that semicon will make a comeback or even make a higher high, but that doesn't mean that it will go for another 40-50% run. We'll dive into a number of the semicon stocks, which we also looked at previously, already presented some of the bullish entry setup. If all the semi support this rally, then it's easy for Nasdaq to bump into this resistance zone, 15,200 all the way to 15,600. And if that's the case, then we'll pull up S&P 500. We should see another extended run as well. But because S&P 500 has a lot of other sectors, we do need semicon because there are still other sectors that could push the S&P 500 up. If it could sustain, if the rally can be sustained, then 4,500 should be the next target. We need to see whether this extended round will go all the way to 4,500 or it will take a pause here and then followed by another third rally. So 3 push up, first push, second push. Right now is only second push and it's still unfolding. That's S&P 500 and the Nasdaq. For the Russell is also very constructive, very bullish. So I like the rotation into Russell 2000 together with the S&P 500 because when Russell 2000 rallying up, that signified that a lot of the stocks step together. Not only the technology stocks or not only the S&P 500, those 500 or 100 stocks. There are a lot of the small mid-cap stocks, even they are not inside 2000, Russell 2000. We still see that the overall market breadth has been improved tremendously. So I think this is important. If we still get a Russell 2000 to have the rally up and to keep breaking out of this important level, 1920, 1900, then there will be a ton of the stocks that you can trade. And when the market breadth is above the 50 for the long term, it will be very positive for the bull run. And by that time, we could slightly to move to adjust the trade management to buy on dip and to hold the stocks as long as possible rather than to sell into strength, because that might be a lot easier environment to make money. But right now, I still would like to lock in a profit, sell into strength, which you will see in the trade management section, trade review. For this Russell 2000, right now, you can see that it's testing this important level. And this is the access level where the previous breakdown happened during the bank run. This is a very impressive rally, sign of strength rally. This is the accumulation structure, sign of strength rally. Now is testing, backing up, and followed by another push up. That is the small trading range. And if we look at the big one, there's a big trading range here. Is still stuck within the range. We still want to see Russell 2000 to get into this overbought area and then to hold up the gain, followed by a break above 2000. So that is the ultimate targets that I would like to see for Russell. But right now, I already see that there are many small and mid cap stocks that are rallying up and a lot of the setup as well, especially those previously as a growth stock, then turned underdogs like Plug, like Confluent, like Upstart. Those previous growth stocks, it has been rallying fiercely. Next one, last one, should be the Dow Jones. So Dow Jones is not too bad. It's testing the resistance. This is also very impressive run. And if it could come in above and stay above, then likely is going to break out. Then if that's the case, by that time, even if we get Nasdaq hits the previous resistance zone, have a change of character, it's possible that we still have S&P 500, Russell, or even the Dow Jones to sustain the rally. Means that the rotation is fully unfolded. It means that a lot of the funds flow out from the Nasdaq and then into Russell or into S&P 500, some of the value stocks. We'll need to see whether that will happen. But right now, short-term up and swing also up. We need to pick the decent reward to risk ratio for the trade entry setup and be very picky about the trade setup. And also look for the leadership as well, because there are just way too many stocks to trade at the moment. The first thing to do is to watch out your risks. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.